Afternoon, esteemed participants and colleagues. Welcome to the second advanced workshop organized by Carbon Disclosure Project, Stock Exchange of Thailand, and the Global Reporting Initiative on the topic of ESG risk analysis and management, integration into impact measurement and sustainability reporting. This webinar has been made possible by the partnership of various organizations such as the UK PAC Green Recovery Challenge Fund, British Embassy Bangkok, Carbon Disclosure Project, Stock Exchange of Thailand, and the Global Reporting Initiative, or GRI. Since mid of this year, UK PAC, partnering for accelerated climate transitions, have supported us in organizing the program that is part of the Green Recovery Challenge Fund, which is a £60 million program running between 2018 to 2022 in order to support achievement of nationally determined contributions and the long-term goal of the achievement of the 2015 Paris Agreement to address climate change. Through this program, we together will achieve this mission by working with partner countries to improve the capacity and capability of key institutions to reduce emissions and foster inclusive economic growth in the region. This goal will be done through various modalities, including workshops that have been organized for beginner and the first advanced workshop a few months ago, together with published materials that include the presentation decks and video clips of the workshops that can be found anytime through the link that we have included in the slides. To begin our session for today, I would like to invite Kun Narirat Santyati, Vice President, Head of Sustainable Development Department 1, the Stock Exchange of Thailand, to give her opening remarks about our mission and our commitment to address sustainability challenges and also other ESG issues. Kun Narirat, the stage is yours.
Thank you, Henry. สวัสดีค่ะท่านผู้เข้าร่วมอบรมทุกท่านนะคะในนามของตลาดหลักทรัพย์แห่งประเทศไทยดิฉันขอกล่าวต้อนรับทุกท่านนะคะเข้าสู่หลักสูตรอบรม TCFD SDGs Workshop ซึ่งวันนี้เป็นหลักสูตรต่อเนื่องจากหลักสูตร Beginners และ Advanced ที่ตลาดหลักทรัพย์ร่วมกับ UK PAC Green Recovery Challenge Fund CDP และ GRI จัดไปเมื่อเดือนพฤษภาคมและมิถุนายนที่ผ่านมาสำหรับหลักสูตรในวันนี้นะคะเราจะมุ่งเน้นที่การให้ความรู้ความเข้าใจแก่บริษัทจดทะเบียนและธุรกิจต่างๆเกี่ยวกับการวิเคราะห์และการจัดการประเด็นความเสี่ยงด้าน ESG ซึ่งจากthe Global Risk Report ของ World Economic Forum พบว่าประเด็นความเสี่ยงด้านสังคมและสิ่งแวดล้อมได้เข้ามามีผลกระทบต่อการดำเนินธุรกิจอย่างมากขึ้นมีนัยสำคัญนะคะดังนั้นธุรกิจจึงจำเป็นต้องเร่งปรับตัวและจัดการแก้ไขปัญหาต่างๆรวมถึงเรื่องปัญหาภาวะโลกร้อนและการเปลี่ยนแปลงสภาพภูมิอากาศหรือ climate change อย่างจริงจังเพื่อให้สามารถอยู่รอดแล้วก็เติบโตต่อไปได้นะคะจึงเป็นที่มาของการจัดอบรมในวันนี้ค่ะซึ่งตลาดหลักทรัพย์หวังว่าจะช่วยให้ทุกท่านได้เรียนรู้และเข้าใจเกี่ยวกับคอนเซปต์การบริหารจัดการความเสี่ยงด้าน ESG การเชื่อมโยงประเด็นความเสี่ยงด้าน ESG ที่ส่งผลกระทบต่อธุรกิจรวมถึงวิธีการวิเคราะห์และประเมินความเสี่ยงตลอดห่วงโซ่คุณค่าหรือ value chain ของธุรกิจเพื่อช่วยให้ท่านสามารถวัดและบริหารจัดการ impact ที่เกิดขึ้นอย่างเป็นรูปธรรมรวมถึงสามารถนำข้อมูลเกี่ยวกับการจัดการประเด็นความเสี่ยงเหล่านี้ไปเปิดเผยเป็นส่วนหนึ่งในรายงานของด้านความยั่งยืนของบริษัทนะคะสำหรับวันพรุ่งนี้ทุกท่านจะได้เรียนรู้เกี่ยวกับการจัดทำบัญชีก๊าซเรือนกระจกหรือ Greenhouse Gas Accounting ตั้งแต่กระบวนการกำหนดขอบเขตของข้อมูลการเก็บรวบรวมข้อมูลการคิดคำนวณค่าก๊าซเรือนกระจกและการรายงานข้อมูลการปล่อยก๊าซเรือนกระจกซึ่งเป็นหนึ่งในประเด็นสำคัญที่หลายๆบริษัทอาจจะยังมีความกังวลหรือ ไม่แน่ใจเกี่ยวกับวิธีการคิดคำนวณค่าก๊าซเรือนกระจกที่จะนำไปเปิดเผยใน 5-1 Report หรือใน Sustainability Report นะคะนอกจากนี้หลายๆบริษัทก็มีความสนใจแล้วก็ต้องการที่จะทวนสอบข้อมูลเกี่ยวกับการจัดทำ Carbon Footprint ของบริษัทตลาดหลักทรัพย์ในฐานะผู้ร่วมจัดงานนะคะจึงได้หยิบยกหัวข้อนี้ขึ้นมาเพื่อให้ความรู้กันก็หวังว่ากิจกรรมเวิร์กช็อปในบ่ายวันนี้แล้วก็บ่ายวันพรุ่งนี้จะช่วยให้ทุกท่านได้ยกระดับความรู้ความเข้าใจเกี่ยวกับเรื่องของ ESG Risk และ GHG Accounting นะคะซึ่งเราได้รับเกียรติจากวิทยากรจาก CDP GRI WBCSD Deloitte รวมถึงองค์การบริหารจัดการก๊าซเรือนกระจกหรืออบก.และ South Pole ที่ถือว่าเป็นกูรูผู้เชี่ยวชาญในเรื่องนี้มาบรรยายให้พร้อมทั้งมีวิทยากรจากภาคธุรกิจอย่างธนาคารกสิกรไทยเครือเจริญโภคภัณฑ์หรือ CP Group มาแชร์ประสบการณ์และ Case Study ให้ทุกท่านได้เรียนรู้ร่วมกันนะคะก็ขอเชิญชวนให้ทุกท่านได้ซักถามวิทยากรผู้เชี่ยวชาญได้อย่างเต็มที่เลยนะคะและนอกจากหลักสูตรอบรม TCFD SDGs Workshop ที่ตลาดหลักทรัพย์ร่วมจัดมาอย่างต่อเนื่องแล้วล่าสุดนะคะตลาดหลักทรัพย์ยังได้จัดทำคู่มือเกี่ยวกับแนวปฏิบัติที่ดีในการเปิดเผยข้อมูลตาม TCFD หรือ TCFD Good Practice Handbook ฉบับแปลเป็นภาษาไทยนะคะโดยร่วมมือกับ CDSB หรือ Climate Disclosure Standards Board และ SASB หรือ Sustainability Accounting Standards Board รวมถึง CDP ที่ช่วยสนับสนุนการทำงานในการจัดทำคู่มือฉบับแปลตลอดช่วงหลายเดือนที่ผ่านมาเดี๋ยวขออนุญาตแชร์หน้าจอนะคะจะได้เห็นตัวอย่างของตัวเอกสารนะคะค่ะอันนี้นะคะก็จะเป็นคู่มือเกี่ยวกับแนวปฏิบัติที่ดีในการเปิดเผยข้อมูลนะคะตาม TCFD ซึ่งก็หวังว่าจะเป็นเครื่องมือที่ช่วยอธิบายแนวทางและตัวอย่างของแนวปฏิบัติที่ดีในการเปิดเผยข้อมูลตาม TCFD ซึ่งจะครอบคลุมทั้ง4องค์ประกอบหลักของ TCFD เลยคือตัวอย่างแนวปฏิบัติที่ดีในการเปิดเผยข้อมูลด้าน governance หรือการกำกับดูแลด้านกลยุทธ์ด้านการบริหารความเสี่ยงด้านตัวชี้วัดและเป้าหมายโดยจะรวบรวมเอาตัวอย่าง case studies นะคะจากบริษัทในต่างประเทศมาเป็นแนวทางให้บริษัทจดทะเบียนและธุรกิจไทยได้ศึกษาเพื่อยกระดับการเปิดเผยข้อมูลด้านความยั่งยืนของธุรกิจไทยต่อไปซึ่งตัว handbook ฉบับนี้นะคะจะเผยแพร่เป็นซอฟต์ไฟล์นะคะโดยไม่มีค่าใช้จ่ายสามารถทุกท่านสามารถที่จะดาวน์โหลดได้จากเว็บไซต์ของตลาดหลักทรัพย์นะคะ worldwideweb.sustainability.com ตามที่ขึ้นใน QR code นี้นะคะสุดท้ายนี้นะคะตลาดหลักทรัพย์ขอขอบคุณ UK Pack Green Recovery Challenge Fund ที่เป็นสปอนเซอร์ในการสนับสนุนงบประมาณในการจัดกิจกรรมให้ความรู้เพื่อส่งเสริมการพัฒนาธุรกิจอย่างยั่งยืนและการเปิดเผยข้อมูลด้านความยั่งยืนของภาคธุรกิจไทยตลาดหลักทรัพย์หวังเป็นอย่างยิ่งว่าทุกท่านจะได้รับประโยชน์จากเวิร์กช็อปวันนี้นะคะแล้วก็กลับไปยกระดับผลการดำเนินงานด้านความยั่งยืนของบริษัทท่านเพื่อเสริมสร้างความเข้มแข็งและความเชื่อมั่นในสายตาของนักลงทุนและผู้มีส่วนได้เสียอื่นๆตลอดจนมีส่วนสนับสนุนการเปลี่ยนผ่านสู่ระบบเศรษฐกิจคาร์บอนต่ำของประเทศไทยต่อไปค่ะขอบคุณค่ะ
Thank you, Kun Narirat, for your opening remarks. Without further ado, I would like to invite Mr. Andrew Bird, Economic and Prosperity Counselor and UK Permanent Representative to UNESG, British Embassy, Bangkok, to give his opening remarks as well. Mr. Andrew, the stage is yours.
Thank you. Apologies, delay with the technology here. Hopefully you can hear me all right now. Thank you for the introduction and good afternoon, Kun Narirat. Thank you so much for those words. Ladies and gentlemen, distinguished guests, it's a pleasure to be here to speak to you today. And thank you so much for joining this webinar. In June, we had a workshop on climate risk assessments and climate-related scenario analysis in line with TCFD. So we're really pleased that we're able to continue to support your journey on climate risk disclosure through this session, which I think will be a bit more practical and look specifically at climate risks analysis and management through greenhouse gas accounting. So I hope that you can take some of the insights from today and really put them into practice in your company and start looking at, of course, at disclosures I know you will already be thinking about with the one report from the SEC, but also about how you can look at TCFD aligned disclosures. Ladies and gentlemen, we're less than 2 weeks away from COP26, the global climate change negotiations for which the UK will be the presidency. And we've been repeatedly warned that if we do not agree dynamic action at COP26, a complete change of direction, it will be too late to prevent catastrophic climate change. And of course, for the UK as presidency, we'll do our best to make sure we get the agreement we need. But as businesses, I imagine that these negotiations and the risks they relate to can feel quite remote. But the UK has been urging businesses around the world, not just governments, to be a key part of taking collective action and raising ambition to address climate change. And in fact, there's more and more signs that businesses are following. So businesses who associate themselves now with this action on climate change account for more than 20% of global GDP. And they have signed up already to commit to net zero emissions at some point in the future of their business through something called the Race to Zero. But traditionally, I don't think we've thought of climate change as a business issue in the same way that it's an issue for governments. We used to think that firstly, businesses cared mainly about wealth creation for their shareholders and owners. And secondly, we used to think that businesses had shorter time horizons. Now, I would argue that both of those criteria now mean that businesses should care, and that this is one of the reasons for disclosure accounting being so important now. We all know that the modern model of business is not about shareholders at the center and above everything else, but rather it considers the values and objectives of all the stakeholders in a business. So yes, your shareholders or owners, but also employees, lenders, the community, and so on. And increasingly, these broader groups of shareholders are clear that seeking environmentally and climate sustainable growth from companies they own, work, or lend to is critical. And you can see some of this trend in particular now among investors. For example, 160 financial institutions with global assets totaling $70 trillion have joined the Glasgow Financial Alliance for Net Zero. And they've committed to help maintain or achieve net zero through transparent reporting, and accounting in line with the UN Race to Zero criteria. And so this is a really, I think, a strong example of some of the biggest investors in the world taking the lead and pushing this forward. Then there's this thing about timescales, and we've always thought, well, climate change happens over a really long period of time. This is something for our grandchildren or whatever it may be, decades in the future. But actually, the latest science has come out in the last month and a half and in advance of COP26. And the latest science suggests that we will hit 1.5 degrees Celsius of global warming within 6 to 11 years. And the most likely figure is probably about 8 years from now. Now, implicit in this rising of the temperature by 1.5 degrees are a couple of things. One of them is that severe heat waves are likely to be 50% increased. So the risk of a heat wave that is severe, as in dangerous, is likely to increase by half over the next sort of 8 years or so. Over the same period, the risk of flooding is likely to increase by about 15% globally. Now, of course, this is just the start of what will be more serious. I can't tell you, unfortunately, what the impacts will be on your business in Thailand. There's modeling that you can draw on, I am sure, but I don't have that detail. What we can tell you is that Thailand is among the 10 countries most affected globally by climate change over the last 20 years. We can also tell you that as the temperature rises, so the impacts will be disproportionately felt in Thailand and other countries in the tropics of the Earth, as opposed to in the northern hemisphere or southern hemisphere further down. So the risk of flooding here is likely to be very much increased over the next 10 years and continue from there. And indeed, if we look at Bangkok in particular, for example, this city sits on average about 1.5 meters above sea level, and relative to the sea, the land and sea are sort of kind of swapping over. So gradually, every 10 years, the sea rises 20 centimeters relative to the land. So while I can't say what that means for your business, we can see that there are going to be some very specific and significant effects in Thailand and in particular in Bangkok in the coming 2-3 decades. And it's obvious, of course, that one of the most immediate ones is for those of you who work in agriculture or any business that has anything to do with agriculture, with yields becoming unpredictable and lower. But for everyone else, there are risks which I think are broader and more unpredictable. In the UK, the rising risk of flooding has meant that it's been impossible to insure some properties against damage of all forms, and businesses have had real problems, particularly if their business, their factory or whatever it was low-lying somewhere that is now at increased flooding risk. And some people have been unable, and businesses have been unable to resell their properties as a result. So I think there's a really clear and now, unfortunately, immediate risk from climate change. And this is one of the key reasons why corporates should care about sustainability reporting. So I've said stakeholders likely demand it, and also it will allow you as a business to assess your climate risk and to manage it better. But of course, there's another reason to care about sustainability reporting, and that is that it will help your company's performance and competitiveness in the future. It may also help you to meet regulatory demands because, of course, regulators are increasingly demanding that we do more to disclose. The UK has already implemented requirements around TCFD-related disclosures for its listed companies. The SEC in the US is looking at this now and will likely come up with criteria by the end of the year. And the IFRS Foundation is looking at developing new sustainability standards. Here in Thailand, of course, we work closely with the SEC that has implemented the excellent One Report and is now, I think, it's become a TCFD supporter, so I imagine is looking further along that line also. Ultimately, we expect capital and assets to be channeled to support the transition to a low-carbon economy. So for those that have clear, sustainable reporting practices and a transition plan, they may have the opportunity to attract investment more easily and quickly. I hope that today will give you a sense of why it is in your interests, in the interests of all your stakeholders, to take the time and effort to begin sustainable disclosures at the earliest possible opportunity. Before I conclude, I would like to take this opportunity to thank the Stock Exchange of Thailand for their collaboration. And I'd also like to thank our speakers from the Carbon Disclosure Project, from the Global Reporting Initiative, from UNSGAP, Deloitte, Capricorn Bank, WBCSD, South Pole, Thailand Greenhouse Gas Management Office, and CP Group for sharing their practical experience and insight with us. Thank you.
Thank you for the opening remarks, Andrew. For the next 1.5 hours, we will have a great line of speakers that will share about how to integrate ESG risk analysis and management into impact measurement and sustainability reporting. The first speaker is Lani Harijanti, ASEAN Program Manager of the Global Reporting Initiative, that will give us an overview about how we connect the dots from our first seminars to today's seminars that will encompass impact measurement, reporting frameworks, and also risk analysis. After the presentation by Lani, we will have Dr. Patrick Martin, PhD, from the UNSCAP, or the United Nations, the Economic and Social Commissions for Asia and the Pacific, who will share about the global policy landscape of sustainability risk, especially the ones related to low carbon economy, carbon tax, and sustainable finance. After the presentation from Dr. Patrick Martin, we will deep dive into ESG risk analysis through 2 speakers. The first one is Mr. Constant van Erschot from World Business Council for Sustainable Development. Constant will share about what and why enterprise sustainability risk management is important, together with the tool that can be used by organizations to assess their risk and manage the risk. Last but not least, we will have Tichachai Apipongcharon from Deloitte, Thailand, who will explore the principles for ESG risk analysis and management, follow with the practical step by step of doing ESG risk analysis and management. Of course, throughout the session, if you have some burning questions, please don't hesitate to type your question directly in the Q&A box. We will select several questions to be addressed to each speaker after the presentation session. Of course, after the Q&A session, we will have a short fireside chat with Dr. Wichai Narongwanich, FSVP, the first Senior Vice President of Kasikorn Bank, that will share his experience in applying ESG risk analysis and management in his organization. Today's session is mainly organized by the Global Reporting Initiative, or GRI. For those who are not familiar yet with GRI, GRI is an independent international organization that mainstreams sustainability reporting and also set up one of the most used sustainability reporting standards globally. These are our impacts, and of course, we hope that by joining our training today, you will continue to apply GRI standards in your sustainability reporting. Before I invite Lani Harijanti to connect the dots between our previous webinars and today's webinars, I would like to remind you that we have a translation room for those who are more familiar with Thai language. All you need to do is just to see the screen below and then select translation to choose the language that you are comfortable with. And also to remind you, in the beginner and the first advanced workshop organized a few months ago, we have discussed about the conceptual thinking followed with international and national framework of sustainability that includes GRI standards, TCFD SDGs, and also gender lens for diversity and inclusion. And also the first advanced workshop, we have also deep dived into SDGs impact measurement and see various SDGs targets and indicators where we can align our impacts and also report it in our sustainability reporting using the GRI standards and SDGs indicators. Before I begin formally the first presentation from Lani, I would like to ask you about how you think about an organization that mainstream enterprise risk management. So here you can choose any answers that are relevant to your organization about what you think and what you have done in terms of mainstreaming enterprise risk management. So please feel free to choose relevant answers, and after that we will show you the results of the poll in 2 minutes from now. Yes, please don't hesitate to select the answers that you think are relevant to your experience and organizations. Yes, I can see that now people are answering the questions. Yes, 1 minute more. Okay, yeah, I see more responses coming in to the poll. All right, maybe now, Maria, would you mind sharing the results from the poll? Yes, as you can see, most of the companies here already have a risk management team. And the second most selected answer is companies here have done an ERM, or enterprise risk management. So it seems that your organizations are not too foreign with ERM, or enterprise risk management. So I hope that today's seminar will give you more knowledge, more experience to strengthen your ERM strategy and practices. Now, without further ado, I would like to start officially our seminars by introducing Lani Harijanti, ASEAN Regional Program Manager of the Global Reporting Initiative. This afternoon, she will present how to connect the dots from our first seminars to today's seminars, or in other words, how to connect and align impact measurement, reporting, and also risk analysis. Lani, the stage is yours.
Thank you, Henry. So, good afternoon, everyone. So let me start. So I hope the slide is doing okay and my voice is okay. Okay, so in the beginner workshops, we have mapped out about the necessary tools to integrate SDG into our sustainability strategy and reporting process. I just would like to remind you that we have supporting documents, which is important for you. They are the business reporting on the SDG, and then the most recent updated mapping SDG with GRI. Also, not to forget, as Henry mentioned before, we would like to show about the gender equality and social inclusion by making sure that they are visible in all our reporting practices, and also that we can show the best practices that we do for the gender equality purpose, and also to include the SME in our supply chains. Now, in the advanced workshops, we talk about impact reporting. We refer to the impact management projects. So the first thing is about classification of impact. First is, are we doing, just avoid harms, or are we already at the stage of benefiting stakeholders, or are we at the stage of contributing to solutions? Now, when we want to report about our impacts, we look at these 5 dimensions of impact. If we want to tell about our impact, we need to know what are our impacts, who are experiences the outcomes, how much is the impacts, and how far are we contributing to the impact. And then here comes what are the risks if the impact does not occur as expected. Now, I think you remember about this pathway. So risk usually comes when we identify problem and challenges before we go identifying about our activities to address the problems and solutions that we want to take up. So this one is a short comment from Peter Geiger, Group Chief Risk Officer at Zurich Insurance Groups, mentioned during the Sustainable Development Impact Summit in 2020. So he said that risk is core to questions of sustainability. Sustainability to me is that you are able to cope with the changing environment. So with the COVID and the newly released IPCC report, I think this is timely. In May 2020, last year, the World Economic Forum shows that the COVID-19 risk outlooks, one of them is also about tighter restrictions on the cross-border movement of people and goods, which means geopolitical. I think this is a good pathway before the explanation from Patrick about the geopolitical landscapes that going to impact our risk scenario. Now, what is ESG risk? So ESG risks are the environmental, social, and governance related risks and or opportunities that may impact an entity. Now, I would like to refer back to our GRI standard. So this one is the updated GRI standard, newly released on the 5th of October. So basically, under the new GRI standard, the risk management is under GRI 3 or material topics. It's part of the materiality analysis process. We would like to remind our GRI standard users that when we do a materiality analysis, we need to identify actual and potential impacts, so it means risk, and also assess the significance of the impacts. Now, under GRI 3, for material topics, when we identify and assess impacts on an ongoing basis, it should not only be limited to your own activities, but you should also start to look at the business relationships that can influence your impact. And then when we determine the impacts, we need to engage relevant stakeholders, as mentioned before by Andrew, and also experts. Now, in the process for determining materiality, when we want to assess the significance of the impacts, we need to see whether the impact is actual or potential, whether it's positive or negative, the likelihood and the severity, the scale, the scope, and the remediable character, and also the human rights impacts or aspect of the impacts. With the new GRI standards, basically you need to take a look at this not only at the GRI 3.1, but also at every level of material topic, we need to assess what are our impacts on each material topics that we selected. The new GRI standard now is, we now down to 31 topic specific standard. So basically, that's my presentation. It's about connecting between the first events to right now. So risk is part of identifying of problems and challenges before you, and also part of the materiality analysis under the sustainability reporting exercise. Back to you, Henry.
Thank you, Lani, for your introduction. So now, without further ado, I would like to invite our second speaker, who is Dr. Patrick Martin, PhD, Climate Finance Specialist from Macroeconomic Policy and Financing for Development Divisions of the UN ESG. Today, Dr. Patrick Martin, PhD, will speak about low carbon economy, policy and transition risk that will cover global and ASEAN trend on low carbon economy, carbon tax and sustainable finance, follow with the policy and transition risk due to this global policy landscape on sustainability. Let me invite Dr. Patrick Martin to the stage. Thank you.
Thank you very much, Henry. Thank you. And I will just load up my screen. So, let me just. If I can just share the screen.
Yes, perfect. Thank you,
Excellent.
Patrick.
Excellent. Okay. Let me start. Great. Okay, thank you, everyone. And thank you to the sponsors of today's event and also to the organizers. So as Henry and Lani mentioned, today I'm going to speak about some of the policies and transition risks around low carbon economy. And really, I'm just giving a bit of an overview, and then my colleagues later will do that deep dive. So I'm really going to focus more on at the more general level. And so I'm just kicking off with a bit of discussion, and Andrew mentioned some of these factors around climate change. And as he mentioned, we're 2 weeks out from COP26, and basically there's a lot to be done. As the graph sort of illustrates, global temperatures continue to rise, and the IPCC special report on global warming that is regularly released has emphasized again that human activities are causing global warming, and that we're now basically above the 1 degree mark. And as Andrew pointed out, very soon we'll be at the 1.5, likely to reach that within, and these are sort of older figures, but we're really likely to reach that before 2030. And as the Executive Secretary of UN Climate Change, Patricia Espinosa, made the point, climate change is one of the biggest threats facing humanity. And particularly, as we touched on, as Andrew touched on, this emphasis that this climate change is a very existential threat, both to people and to business, and therefore the importance of engaging with it and managing it and reporting it so we understand. So some of the impacts that are highlighted that climate change likely to affect is that greater frequency of extreme weather events, human mortality, the widespread loss of biodiversity, decreasing agricultural productivity, and this is particularly important within the ASEAN region and Thailand, and the potential for food shortages. So these are very daunting challenges for all countries globally, but these adverse effects are proving particularly severe for countries within Asia and the Pacific. We've seen, large increases in cyclones, in floods, and in droughts in some areas. And these are very real impacts, and these create very real problems for both people and the environment and for business. So that said, obviously climate is not the only thing, but climate change is very much a fundamental threat to the broader development and the broader sustainable development goals. And as you can see from the graph, we really need significant reductions in greenhouse gases to avert this climate crisis. And what has been agreed under the Paris Agreement and the commitments under Paris is that we will attempt that the aim is to limit global temperatures to well below the 2 degrees and ideally the 1.5. And yet we're struggling, and the chart shows how within the region, particularly around the SDG for climate action, we've really struggled. And this has only been complicated with the pandemic, as obviously fiscal space for many countries has been taken up, focusing on the immediate health goals. But even before the pandemic, the region was not on track to meet the SDGs. So what we've got to do is really refocus our attentions. And yet what I'd like to emphasize is both with these risks come opportunities, and there are very real opportunities that exist to incorporate sustainable climate action into the COVID recovery and within business, and the opportunities that are there. I'd just like to sort of emphasize this thing that that we really do have to focus and move forward, and that's why this focus on reporting of these risks is becoming paramount. And I sort of refer back here to the Stern review, which was back in 2016, which made the point that climate change was the greatest and widest ranging market failure ever seen, presenting unique challenges for economics. And that the risk, and the very real risk, that a sudden late transition could destabilize the global financial system. Now that was 15 years ago, and that shows that we really do have to get moving and focus. But what I'd like to really emphasize is this opportunity for both focusing on this, managing these risks also creates opportunity for business. So let's just talk about sort of the risks created by climate change. And obviously there are a number of risks. So there's the very real physical risk created, whether that's from drought, from flood, from cyclones, the very risk of destruction of property, for example. There are transition risks, the potential for assets that can no longer be used by virtue of climate change, whether that's regulatory change or whether that's physical change. But those assets becoming stranded, creating write-downs in their asset values. That subsequently obviously makes financial risk, loss of businesses, obviously, and potentially unpaid loans. And I'm going to lead to this because this link with sustainable finance. and really how these risks very much impact on the broader financial system and the need for sustainable finance. There's also regulatory risks, not only potential fines for not complying with environmental laws, but increasingly potential regulatory risks around that could intermingle with the transition risks, i.e. that you may not be able to do certain things and that you'll have to transition, as well as potentially increasingly directors have duties to report and manage these risks under their directors' duties and are exposed to regulatory risks. And as Andrew sort of touched on, there's also increasingly reputation risks, loss of sales due to poor public perceptions. So companies that don't engage with ESG and climate change, that their clients and their customers may not choose to do business with them. Likewise, their financiers may not choose to lend to them or invest with them. And these are very significant risks that have to be managed, and part of that management is around measurement and reporting that we're going to discuss today. So yeah, just to expand, businesses directly impacted as a result of weather events or widespread environmental damage, they're the physical risks. But in some situations, these indirect risks can be more material than the direct, and can have more significant outcomes on business. For example, companies could face significant increases in the cost of production if they're required to meet environmental regulations, say to install clean technology. Anticipating these risks is now an integral part of business strategy. And now, obviously, those factors and how each will impact on different businesses will depend on the industry, the sector, there is geographic context in terms of and regulatory context depending on what sector, and they have to be managed. What I'd like to I'd also like to emphasize that this is integrally intertwined with finance, because essentially for businesses that aren't engaging and aren't reporting these risks, their financiers will have less chance, will be less engaged with them and may not be able to lend to them. And in addition, the sheer scale of funds needed to address climate change means that public funds, government funds alone, will not be able to meet the investment necessary. And so it's very important that we engage with private sector and really catalyze and utilize the private sector. Is vital to reaching the investment levels required to create a low carbon, climate resilient community and economy. Just more broadly, I just wanted to touch on when we talk sustainable finance, obviously I'm talking more broadly, there's the environmental aspect, but as we'll hear today, there's the social and governance aspect within the other SDGs or ESG, when we refer to ESG, and how we're breaking up that environmental element. It's not just mitigation activities, but adaptation and other environmental emphasis. And as I sort of mentioned, I think it's important to remember that there is real opportunity with this. And these two gentlemen you may see as we move into COP, particularly UN Special Envoy Mark Carney, but making that opportunity that this change also creates opportunity. And the management and disclosure of these risks must become comprehensive and they must go mainstream. And I pick out Larry Fink from BlackRock, one of the largest fund managers, who believes that the transition really creates this historic investment opportunity. So transition to a low carbon economy is essential to reduce the risks from climate change, and anticipating and mitigating these risks is obviously crucial for a smooth and successful transition. And a strong focus on these risks is integral for climate policies to succeed. So despite any current economic weakness due to the pandemic, policymakers should really focus on this transition and the need for these actions. So, and now I'm just going to touch on a couple of those. So policies that we might see coming out of this. We're we're seeing the call for the elimination of fossil fuel subsidies in order to reduce their consumption. At the moment, regionally, we're seeing over 240 billion a year in these subsidies, and these are real risks for companies that may be receiving some of or benefiting from some of these subsidies, because the focus will increasingly be on investment in renewals. And there is a need for this transition because there will be a structural shift, and managing that is very important, both on a countrywide level and at a business level, to engage with these and mitigating climate risks also through climate resilient infrastructure. And that sort of falls into that category that I'm talking about, that there is both opportunity for the firms that focus on that, but aware and measuring and engaging with it, but also for the firms who are potentially at risk. So some of the policies that we may see is the introduction of a carbon price. Now, carbon price provides a really powerful economic symbol to carbon emitters to reduce emissions, or if they choose to continue emitting, pay for the carbon they produce. And we're seeing this introduction. And when you introduce carbon price, there's a number of ways you can do it. Two ways really: through the market, through a trading system, or through a carbon price. And I'll talk about that a little bit more. But imposing this carbon price sends a real financial message to investors that low carbon investments have value. And we're seeing that across the region, and I think increasingly we will. Now, what that carbon pricing instruments are really a powerful component to the post-COVID recovery. But what's important for companies is that ability to measure and know how much carbon you are producing. Because if a price comes, you need to be aware of that. You need to measure it. You're going to need to report it, and you're going to need to manage it. Alternatively, than a trading system, it could be introduced from a tax perspective. And recently, ESCAP's Economic and Social Survey highlights how the phasing out of fossil fuels and the introduction of carbon pricing could really open up significant fiscal space. And this little graph to the side really illustrates the different revenue that governments could gain from the introduction of a carbon tax. And that may, I think that will become more attractive, particularly in the environment. I'd like to focus now on things that are happening globally. So the EU, the Europeans have recently introduced the European Green Deal, and the EU has this intention to very much steer both private and public capital towards a sustainable economy with a common language on what is sustainable and what is green. And I just show you those icons to show these sort of the focus of things that the EU is focusing on. But the reason I emphasize that is because for many businesses, your trading partners are in Europe, and therefore the European focus exposes your business to those risks, because as part of that Green Deal, the EU is also talking about the introduction of a carbon border adjustment mechanism. And the logic of this, it is a tariff mechanism intended to reduce carbon leakage out of the EU and to protect domestic companies from foreign competition in countries with weaker or no carbon pricing. And that may be a real emphasis for countries in the region to introduce carbon pricing. And the sectors that will be included under the carbon border adjustment, the EU's carbon border adjustment, include cement, electricity, fertilizer, iron, steel, aluminium. And there's an initial transition period. Let me focus. So what, just conscious of time, very much that we're seeing a lot of key policy areas, be they on green taxonomy, which is really standard definitions of what is green, carbon pricing, climate-related sector policies across different industries, the development of green and capital markets, and as we'll hear much more from my colleagues coming up, obviously climate risk disclosure and reporting. So just to finish up, the emphasis has to be, given these risks, given these policy changes that are sort of potentially coming through that could influence, that business really does focus on, starting to measure, integrating ESG into their business function, sustainable business accounting for and disclosing their climate risk related information, potentially adapting internal carbon pricing to get an idea of where you're placed on the carbon pricing. And so just that these policies are really going to, are coming. And I wish you all good luck and thank you. Thank you. And back to you, Henry.
Thank you, Patrick, for your excellent presentation on the global landscape of the policy risk related to environmental issues. And now I would like to introduce the second speakers. However, I need to wait until Patrick,
Sorry.
Okay, unshare your screen, Patrick. Thank you so much. So now I would like to introduce our next excellent speaker, Constant van Aerschot, Director of WBCSD Asia Pacific. Constant will explore and introduce us to deep dive into ESG risk analysis and management that will encompass what and why it is important, principles and strategies in doing sustainability risk management, and then also the tool that an organization or your organizations can use in applying the ESG risk analysis and management. Constant, time and the stage is yours.
Thank you very much. Let me share my screen. Can you see it? Can you see the slides?
Yes, perfect.
Thank you very much for having me. So I will be talking about how to build resilience in your business by applying risk management to ESG related risks. So my name is Constant. I work for the World Business Council for Sustainable Development, in short, WBCSD. We are industry association registered as a non-profit based in Geneva in Switzerland. And I'm based in Singapore and I'm looking after the members in Asia Pacific. So first I'd like to set the context of risk in both worlds, in a financial system on the left, and what we understand are the non-financial systems or the ESG world on the right. So financial systems is about allocation of financial capital, but typically does not recognize natural and social capitals, which the ESG or the sustainability world can recognize. And now there's a short kind of animation that hopefully you will all see on those two worlds and how they should actually align. Let me check if it works. What's the feedback? Is it okay? Are you seeing the animation?
Yes, we can see it. Thank you.
On the left, you have the financial system that most of us are familiar with. And on the right, the world of sustainability and how do those two worlds actually speak to each other is very important. And we see a lot of misalignment between the business, financial, and risk management world with the chief sustainability officer. And you can see here on the right side, the natural capital, the social capital that non-financial systems are actually dealing with. So we are cracking the nut on how those two worlds try to speak to each other. Because in the center, you have the business that actually needs to function. So at WBCSD, we have been working on this for many years. As I said, we've been around for 26 years on business and sustainability. And you see on the top side of this slide, are the tools and methodologies and frameworks that we developed together with industry, we are an industry association, on decision making. At the bottom, you have all the tools on disclosure, and GRI is of course the framework of reference for it, but also on how should company actually disclose what and for what purpose. So I will highlight more the top part of the decision-making tools, and so typically how to align the more traditional finance-focused risk management approach to the ESG risks. So that's the topic of my presentation. So the first, why should ESG matter to your business? Why not just go traditional enterprise risk management route? First is because you have a lot of change happening. We know about the mega trends that we see on climate change, but also investors now are asking more and more data on ESG. And the reason for that is that they see a company that has better ESG performance as less risky. That means if you manage your environment and social and have good governance, your risk profile is lower, so hence your cost of capital should be lower. Employees also want more purpose in the organization they choose to work for, and customers demand more products that are green in brackets. We have heard from the regulator already more and more requirements on ESG disclosure, and of course the NGO and the communities are asking for more sustainability. And you can see this, that's the risk profile of the World Economic Forum, and at the bottom in 2007, 2008, most risks were related to the economy. And as you go up gradually over time, you can see that those risks, likelihood and impact become more and more related to the environment and society. So clearly there is a shift in risk perception. By the way, infectious diseases was actually noted, but quite low on the ranking. So if the business context is changing, we've seen this with COVID, profound change, that means the risk management needs to change. So you see, you have to focus more on supply chain risks. The change from COVID on remote working or human rights and all these things are a new business context that the risk management needs to take into consideration. So on the right-hand side, you see what why risk needs to be updated almost on a daily basis. At the same time, ESG reporting landscape is moving fast. More and more stock exchanges require a lot of ESG disclosures, and you can see this through the mandatory voluntary reporting provisions that many stock exchanges and regulators in the world are imposing. So if you go back to the traditional enterprise risk management, ESG, we have done a survey and we looked at whether the risks that are being filed at the stock exchange align with what ESG risk and the materiality aspect of sustainability, if there's some sort of alignment. And the result is there is not a lot of alignment. So what companies report in their risk filings has little to do with what chief sustainability officers actually recognize as material risk to the company. So some alignment exists, but 24%, which is quite significant, say there is no alignment. So it's two different worlds that we try to bring together. And then if you look deeper in the different sectors, so on the left side, you have the different industrial sectors, and on the right side, you have the percentage of alignment. So some sectors align their sustainability risk assessment better with their corporate filing risk assessment. So personal care and construction material, oil and gas are more aligned, let's say, than retailers and telecommunications. And you can see on the right-hand side, what topics you have more aligned with or less. So, the more the ecosystem services, society and human risks are less aligned than, for example, climate change. So that's an interesting part. And also, previous speakers touched upon the TCFD. Here again, we can look at whether disclosure that is being made on integration of risk management or resilience of strategy, we can see that progress can be made. So we have issued this report on a methodology on how to try to align enterprise risk management with sustainability risks. So it's a simple kind of framework. You see the 5 points to define a material issue, to recategorize material issues so that the two worlds kind of speak to each other, identify the risk disclosure, and see which one are aligned, which one they are not, and try to reconcile the two. So here, typical at the bottom, the small print, which I don't expect you to read, are the risk filings. Top right, which is probably you're more familiar with, are the ESG risks that you find very often in sustainability reports. So just by looking at those two typologies of risk, you try to align these. And so we have worked with COSO framework, which is for enterprise risk managers, kind of the framework on risk management. And you see the organizations that are on the right, and we said we have to revisit the kind of more static risk management cube, which you see on the left, which is a very static way of, okay, we do a risk assessment, what is our risk response, what is our control activity, etc. And then the cube, you have your strategic operations on the top, and then the different business units and division on the right. So that was in 2004, how companies would view risk management. So this new guidance actually tries to embed a more complex world into enterprise risk management. And so this guidance has come up with those 5 headlines: governance and culture, what is your strategy and objective setting, performance, review and revision, and how to communicate the findings and the strategy. And I've taken up, so I mean, that's the purpose. I've talked about this, to bring together those two worlds of enterprise risk management and ESG risks together. Is really to understand each other, to create a common language, look at how to improve risk disclosures on both sides. And I just give you one example, and you can see the graph on the bottom right on recommendation number 2, which is strategy and objective setting. Traditionally, you would only see the top ones, so the financial, manufacturing, and intellectual side. And then, but all the parts below, like the human capital, the natural environment, would in the past not be recognized as a risk. So that's why you have those two worlds kind of being separate. But through this new guidance on enterprise risk management, you embed those ESG risks into enterprise risk management considerations. Then, of course, some companies are more advanced than others. So we have developed a tool for companies to see what is the level of integration of ESG related risks. Do I have two different worlds, or do I have some sort of alignment? How can I assess the integration of those risks into enterprise risk management? So that's a tool, so you can download this. This is free. Freely accessible. And then we thought, well, we need also to develop a new method on risk management, because clearly you have more and more considerations, and the world is becoming more complex. So on the left side, you have the traditional 2x2 matrix, which is, okay, what is the likelihood of an event happening? And if it does, what is going to be the impact? So that's a traditional way of risk management. But with ESG, you have an interconnected world that is a lot more complex. So how can we deal with the complexity of maybe smaller events, but a multiplicity of smaller events can become a lot more impactful than the event, a single event only. And what is important is also to see what is the speed and which risk can impact. You know, on the left-hand side, you don't have the speed. You know, are we talking about risk in the next 12 months or 3 years? So this new methodology allows you to do this, which is relatively complex, but actually brings in a lot of information if you want to do some proper decision making. And here, so that's a traditional way. So that's an example of from the food and agribusiness. You know, again, likelihood versus impact. Then, if you look at the network view, so it's what is important in risk management with that in a complex world is how to capture the connections between risks. So how to capture the connection between the different bubbles here? How is water risk impacting land degradation, or how inefficient production practices actually impact water availability or pollution for another operator that is beyond, you know, my own operations. And then through this dynamic risk assessment, you can identify clusters of connected risks. And through a process of questioning, you have questionnaires where you have to interview people. You get this sense of cluster. And then so you have two clusters: inefficient production practices, land degradation, and nitrogen inefficiency, for example, and another type of risk cluster. So those clusters, if you do the process in depth, you will also see the speed at which those impacts, those clusters can impact your business. Here in this case, 30 months. So the aggregate impact, so just one risk, one bubble may not be identified as serious, but if you look at the cluster, then you can act on the risk on one of those bubbles to reduce the risk or the impact or the speed of its impact. Yeah, and you can see this, whether if you analyze, for example, an airplane crash. Why did an airplane crash? It's very often a combination of things that happen at the same time and together create a catastrophic event. So the same on ESG risk, you have to identify those elements that together can lead to a catastrophic failure, and you will see that the action will be actually a lot more on the left-hand side than the traditional kind of, we focus on food safety and regulation. And then the things on the left-hand side are usually more actionable. It's more about communities, about water conservation, and all these things. Whereas the on regulation, it's more on the policy, long-term impact, and industry association kind of doing advocacy on different type of regulations. So it's a very interesting new way of looking at ESG, which is needed because the world is becoming more and more complex. So we have applied, so it was developed by KPMG. So I forgot to ask if KPMG is in the room to tell. But so we have done these analysis for different sectors, for the food and agri sector, but also for the energy system. Again, if you apply the same methodology to different systems, you can identify those risks that are more linked to ESG and so forth. And with this, I'm going to close my presentation. I thank you very much for your attention, and do not hesitate to just you go to WBCSD website. All the resources are freely available, and you can download them. And I'm happy to answer Q&A after the next speaker. Thank you very much.
Thank you, Constant, for your excellent presentation. So I want to remind you again that the question and answer session will be held after the last presenter. So if you have a burning question or some questions to clarify about some concepts, the tool that our speakers have presented, so please feel free to type your questions in the Q&A box. So far, I have seen a few questions, and I hope we will get more questions as our next speaker will share his experience and his skills and knowledge in ESG risk analysis and management. So the next speaker is Tita Chai Apipongcharon, or MAC, Assistant Manager, Risk Advisory, Climate and Sustainability, Deloitte Touch Tomasu Jayos Advisory. Tita Chai will explore step-by-step of ESG risk analysis and management, follow with practical examples in energy or emissions or social issues. So this is very important for those of you who want to learn practically about how to apply ESRM concepts. Without further ado, Mac, the stage is yours.
Hi, thank you, Henry. Thank you for introduction. Let me share my screen. I'm not sure if everybody can see my screen.
Yes, we can see your screen. Thanks.
Okay, so first of all, thank you, the UK PAC program, GRI, CDP, Stock Exchange of Thailand, for an invitation for Deloitte to share our sustainability risk management framework. And also thank you to all the panelists before me. Thank you, Constance, as well. It's a lot of information. I believe our participant might be a bit in shock, like they have to align and then integrate and connect a lot of ESG alignments with the usual risk. So I will be talking about 3 parts today. The first one would be before implementing the sustainability risk management. And the second one is the framework itself. And the last one is practical examples of sustainability risk management. So this is some sort of key questions you can ask yourself. You can talk among your companies, like why is sustainability a board level challenge? How frequently does the board discuss this risk? It might associate it with the poll we had before. Do you have your CRO? Do you have the team to handle it? And then it has those been escalated, right? The second set of questions, is there clear governance around your reporting processes and controls? Does the board discuss how partnerships can be leveraged, right, to discover and capture new value? It's not about doing all the risk, it also creates new opportunities. So, for example, in these boxes, does the board consider societal issues as business opportunities? Has the board incorporated the priorities and initiatives into the business strategy by using SDG, ESG into it? And the last set of questions, do sustainability measurement and reporting practices enable management to effectively communicate how it drives your organization? Because sustainability factors are part of the fundamentals needed to attain higher returns, organizational resilience, and also stakeholder trust. Companies that neglect ESG risk now do so at their own peril. So you can see this part. This is actually a paper within our Deloitte, written around 2-3 years back. So we have developed the sustainability risk management framework to guide the integration of everyone known as 17 goals, right? Our approach is to incorporate the risk management perspectives and then into the corporate strategy that builds legacy, prosperity, and continuous in your organization. Actually, there is no single standardized approach to incorporating ESG into your own boardroom, but by understanding these goals, then you can create it into your value chain, and then you can create the opportunities. The resulting benefits, there are so many, such as brand differentiation, reputational risk mitigation, innovation and market opportunity creation, as well as attracting talent attraction, and also increase operational efficiency in supply chain. This is the example of Deloitte examples. We actually put all the goals, but it is just an example. We are not talking about for all the organizations to use the 17 goals. We want to do it at their own strengths. As for this slides, before implementing the framework, there's a research by MIT Slogan Management Review. So many sectors have different impact on ESG materiality. This one, you can see the top ones, it's ranked. For example, goal number 4 about education. It's in many sectors such as healthcare, consumption, services, and financial as well. The second one would be goal number 12 and also goal number 14. So it is a contribution towards a more prosperous, socially inclusive, and also in environmental sustainable world. Not all SDG targets can be addressed equally into each organization, as everyone knows, right? So by aligning all those, we found that from the 3 circles, firstly, we have our purpose. I will explain a bit further in further slides. So the purpose is to benefit the interdependency between the sustainable development and the commercial success of the businesses yourself can be aligned to the SDGs and can use to shape the activities and culture of the organization. It's called 2030 purpose. And the second one, let's use the CSV. Everyone heard this term for quite some time. CSV is the heart of a successful CV strategies. It recognizes the societal issues and also put in your business. It goes beyond the philanthropy, just donations or doing some planting. Sometimes it's called greenwashing to be more. And then this part comes in, it's the SRM, the sustainability risk management. So it's the key for business to work towards the goal itself, focusing on the organization culture, capability, and the practices of your own SRM in the organization. And then you can align in your business. SDGs in the middle, it's come here. So you can see it's an opportunity actually. In Asia alone, the value of achieving the SDG is estimated to around a minimum of $5 trillion, which is also associated and increase a lot of jobs. You can see around 1 million jobs, right? For this slide, then how can you have your purpose, right? So there are some around 5 steps you can follow here. Individual companies can take and discover their purpose, basically your own culture, to benefit the long-term performance and also yourself and the society as well. The first step is the inspire. So you can consult your stakeholders, you can do peer benchmarking, you can do desktop reviews on those kind of things before you come. And then the second part would be discovering. So you uncover your corporate identity, key strengths and challenges. Also, again, you can see the consulting stakeholders is the important part in every step, because we would like stakeholders to be part of our sustainability framework, also risk management. And then map purpose to the SDG to create a purpose statement, right? And then comes to these triangles. Step 3, you embed that purpose across the business in your strategy, in your culture, and also in brand and stakeholder engagement steps, right? For step 4, you can demonstrate it. So exemplify your purpose via your programs. You can do program which is more than philanthropy or more than donations, right? It's more towards a CFB approach. And then lastly, you come to evaluate it. Develop an evaluation framework that provides guidance for review, integration, and reporting. So it's similar to your sustainability reporting. So this SRM, what is it? It's offer a unique leverage point to ensure that positive reinforcing cycle of embedding. So as I mentioned, these 3 things into your organization, right? Then come to this part. There are so many boxes. For the first green box on the left here, it's the corporate strategy. I have been repeating about it. It's what you already have. your mission, vision, values, goals, and results, and your business models. What are that? What are those? Like internal environment, external environment, value propositions, and profitability, right? And then your own governance, your board of directors, committees, C-suites, and the people, right? So directors have an important role to play in overseeing how the strategy and risk management work in their companies and meet also the ESG demands from the stakeholders, and also managing relationships and creating trust and transparency to help keep the good relationship between yourself and the stakeholders, right? Then we come here through the lens that I have mentioned before. You take these 17 goals of the SDG, put them integration into your own enterprise risk management. You already have those, I believe. Most of the companies have their own teams, right? The criteria and the universe, for example, the scale, likelihood, and everything, right? The identification measurements, these boxes. And then how do you respond to those kind of risks and those mitigations? So it's come to the response design. What can you do? For example, the key dimension, this thing is for helping the executives and the governance leaders to help make the decisions, building legacy, and also the prosperity and continuity to your business as well. Then it comes for the outcome, as we mentioned, the CSV, right? Creating shared value. So there are many boxes here as well. Value creation, we create it, and then after that, we should also protect it as well. And then the value of the people, every stakeholders counts. For example, your investors, your clients, your employees, right? And also for the money as well, because we want to invest and get something in return, not just doing things and nothing's back, right? And the last part is the control. As I mentioned in the last part, we have to evaluate it in that triangle, if you remember. So you can assure the achievement, operational effectiveness. You can actually measure it, operational efficiency, and also the reliable reporting. So there are several ways now to disclosure your ESG impact and also to do your risk management, right? This one I think is similar to what Constance have already presented, the ESG metrics recommended by the World Federation of Exchange. I think the tough part is letting the sustainability people talk with the risk management people and try to integrate these into this box. I'll give you some examples. Maybe it will have more clearer pictures. So this one, for example, a power and automation group, right? It's a Swiss company. So they provide talented engineering students in Southeast Asia, basically, Indonesia, Malaysia, and Vietnam, and also with elsewhere college scholarships. So think about this. This company may want the workforce, right? The workforce to come to work in their companies. But then how could you get the talented ones? So you may go and find out through the universities, but no, in the end, you can make your own research center. You can help your own talent center. And then it's also help the create the skill levels of the local populations and the skills recruitment strategy. Right? This goal support the SDG 4. So SDG 4 is ensure inclusive and equitable quality education and promote lifelong learning opportunities for all. The risk also there before you come to these opportunities, you may not find enough workforce or skilled ones, but now when you integrate this, you have opportunities. For example, the business actions, what can you do? So these are the 4 steps you can read. Yeah. And for the second examples, there's a French airport operator, which is actually in Cambodia. So for example, they want to do crafting in the airport, but they do not want just to hire them as the subcontractors. So basically they give the contract employment and full social welfare. So it creates the relationship between the company itself and again, the local people. The operator also gain access to a good craftsmanship. And the social part also gain the CSV, right, from the welfare packages and training programs. So they become more experts, more better in their work. So this one would also help in SDG 8 to support this goal, promote sustained, inclusive, and sustainable economic growth, full and productive employment, and decent work for all. Come to think of this, it's on the risk side. For example, if you're going to do some business in other countries and you haven't thought about this carefully, it could become your reputational risk if you are not taking care of your whatever it's called subcontractors, or you are hiring someone to work for you. But they go beyond this. They go beyond thinking about it. So they give a really good program. This is the last example I'm sharing. It's the insurance company. So it's a Swiss insurance company implemented solution to help make communities in Indonesia and elsewhere more resilient towards flooding. Now, even in Thailand ourselves, we have a lot of floods, right? And it really affects businesses, continuity. It affects everything, right? So we would like to do this how? So the firms, themselves, they have support the program of the solution. So they go to talk with the people in Indonesia and help to find the mitigations themselves. And then what do they gain out of it? So the firms also can have the methodology for determining the insurance premiums. So they would know that if they have the data is very, very important, and it's very it's an asset, right? So you can know that what kind of premiums you could sell to those kind of clients. So actually, it looks like you are selling your premiums insurance, but actually you support also the goal number 13. So it's take urgent action to combat climate change and its impact. So you actually help to prevent flooding more. You can find more information as well from the company. So in Deloitte, we also support clients in our climate and sustainability offerings. We do a lot of programs. For example, the climate and decarbonizations to help you mitigate your carbon emissions and also find a way to reduce it. And the second one is sustainable finance. The third one is the governance and impact reporting. So we support in all kind of ESG reporting and disclosures. And the fourth one is supply chain traceability and responsible sourcing. So basically, it's about environmental and also social aspect of helping the companies through their whole supply chain. And the fifth or the last one is the advocacy and policy advisory as well. So it's the embracing sustainability is just good for people on the planet, but it's also good for businesses as well. Yes. And that's the end of my presentation. Thank you, Henry.
Thank you, Mac, for your brilliant presentation. So now we have arrived at the Q&A session for 5 minutes, and also we will have a break for 5 minutes during this Q&A session. So then if you have any questions, just please post your questions in the Q&A box. So please use this opportunity to engage with our speakers directly if you have any concerns, any questions beyond the presentation. So now we already have 2 questions so far. So let me begin with the first question from Bitayanan. So the question is, while I'm sure we can all agree that climate-related policies are beneficial and necessary, how likely is it that such policies will actually be adopted or implemented in Thailand or ASEAN within the next 3 to 5 years? I think this question is best addressed to Patrick Martin. Patrick, would you mind answering this question?
Yes, thank you, Henry. Look, I think in this question, I think that's a very very good question, because I think it's fair to say that there are some real obstacles to government policy instituting some of these regulations and policies in Thailand over that, that it would require real political will, and there are social issues in the broader context of the SDGs to be taken into account. But the thing that I wanted to highlight is to think about this in a regulatory framework. It's not only what the Thai government might choose to do, but rather this in a broader sense of governance, and that's why I raised the issue of the EU and around the border adjustment, potentially the border adjustment, but more broadly, that that from businesses' perspective, there's potentially the Thai government might introduce policy or regulation, or they may not. That said, as a business, you may still be affected by some of these regulatory changes that are happening outside of your country's border. Each country needs to decide its policies themselves, whether they introduce a carbon tax or that's completely up to each country. That said, their trading partners will also introduce different policies that will impact. If you're a supplier, your customers will be increasingly impacted in their countries by their own sovereign climate policies, which may impact. So just to use as an example, if you're borrowing funds or borrowing funds from an international bank, increasingly they will be subject to climate reporting disclosure and managing their risks. And you as a client, they will need to make sure that you're doing your part. Likewise, in a broader supply chain perspective, your customers, if you're a supplier of let's just say garments into you, they will be conscious of how you are. So there's this broader, I guess, issue of climate governance and how not only direct regulation or policy introduced by, say, the Thai government, but the broader issue of this. That's yeah. Thank you, Henry.
Patrick. Thank you, Patrick. Maybe I have there is one more question for you. So for companies, what would be the signs that would indicate that these environmental or carbon related stricter policies are actually becoming a risk to business as usual?
Yeah, I think it's worth we're talking about sort of more broadly around ESG management and the SDG management, that basically is trying to engage with these things more broadly in good faith. I think that there will be signs, and increasingly I think we're seeing that these are coming, and basically I would argue that what you'll see it because it'll gain sort of momentum within the press and political discussion, and you'll see it coming down the pipeline that way. But I think more broadly, as we've discussed today, increasingly there is that need to engage in good faith and start efforts, because these things do take time. The report, as our colleagues sort of pointed out, this is not sort of you wake up tomorrow and you do it. So you've got to sort of start doing it. It takes time, engage with it in good faith, and then you'll be more prepared to take. And that's why I wanted to emphasize the opportunities as well, that the companies that do engage with these things in a positive way, there's opportunities to essentially show to outperform their competitors, because their customers are looking for these things. Yeah.
Thank you, Patrick. Thank you, Patrick. So another question is best addressed to Constant. So the question is from Kainika. Should the criteria about ESG risk and ERM risk be the same or not? And then why? Maybe Constant, if you could help me to answer this question.
So it's a good question. My answer would be they should be aligned. Or the short answer should be yes, but there are two worlds, the financial world and the sustainability world. And we are driving towards an alignment and recognition of the risks, ESG risk into the ERM and vice versa. But my question to the person who asked the question is, how effective is the board in understanding sustainability issues? Because the board has a risk management committee. So the question is, are ESG related risks discussed at board level in the risk management committee. Does the, I was happy to see that many companies on the call have a chief risk officer. But how often do the chief risk officer meet with the chief sustainability officer? Or is it the same person or two different people? So just talking to each other would also help understand the differences and why are those differences, why do they exist, and how to align, because indeed, in the end, they should be very similar.
Thank you, Constant, for your answer. And now I think there is also another question for you. The question is from Kritsana. Talking about risk assessment, could you please suggest the international accepted tools to evaluate the impacts of the ESG risk into monetary unit? I think this question is for Mac and also Constant. So Constant first and then Mac, please.
Well, then I would refer to the COSO framework that I have presented. So if you type COSO Enterprise Risk Management, so you can land on the COSO website or on ours, but that's kind of the enterprise risk management approach to embed ESG risks. So I would say COSO framework.
Okay, thank you, Constant. So maybe now for Mac. So I will repeat the question for you, Mac. So talking about risk assessment, could you please suggest the international accepted tools to evaluate the impacts of the ESG risk in
would have to
monetary unit?
Say COSO as well. It's very popular ones. It's the one that most of the companies are using as well.
Okay, so your answer is also similar to Constance's answer. Right. Okay, thank you so much for your answer. So now I think we are going to the next session, which is fireside chat with Kasikorn Bank. However, we will have a 5-minute break first. If you want to go to the loo or get your coffee, please feel free to do so. And we will return in 5 minutes. Thank you. So now we are still waiting for the speaker for our fireside chat. So while we are waiting for the speaker to join our fireside session, I would like to remind you about our upcoming event and also about our evaluation survey. So first of all, tomorrow, we will have the continuation of our session, and also in December, we will have capital market session with CDP and also GRI. So please ignore the 18th November on the screen. So this is our mistake. So it will be in December. And also before you, when we are waiting for the speaker, you could also kindly fill in our post-event evaluation survey. You can scan the barcode here, and then please remember you need to select multi-country DP worldwide and select the name of the training. Or you can also click the link that is in the chat box that has been posted by Lani. So while we are waiting for our next speaker from Kasikorn Bank, please feel free to fill in our post-event evaluation survey. Thank you. Oh, while we are still waiting for our next speaker, I would like also to remind you that GRI and SM Investments are going to organize the ASEAN Sustainability E-Summit 2021. The topics for the E-Summit this year is Leaving No One Behind, Private Sector in Solidarity for Sustainability, COVID-19 Recovery, and Delivering the SDGs. This event will be organized in October 21st to 22nd, and there will be 4 big sessions that you can join for free through the live streaming on YouTube. So as you can see, the first session will be about leadership, the next generation leadership, or the driving force for sustainability on Thursday, the 21st of October. On the same day, you can also explore and join our second session on how financial markets are driving demand for more sustainable business practices. And then on Friday, October 22nd, you will see session 3, which is about the purpose-driven business, lessons from the pandemic, followed with the 4th session, starting the journey to credible net zero target achievements. Again, this event is free, and also you can join it in the live streaming on YouTube. The link has been posted also by Lani in the chat room. So we are looking forward to seeing you in this event. So now I would like to ask our colleague from Kasikorn Bank if the speaker is now already in the room. So our colleague is now trying to mitigate some technical problems, so maybe please wait. So okay, so our colleague from the Kasikorn Bank said that there is some technical errors for the speakers when he is trying to joining the event, the Zoom link. So they asked for us to wait for a few more minutes. I hope you wouldn't mind to wait a few more minutes, because in this fireside chat we will explore practical examples about how to do ESG risk management from the perspective of the Kasikorn Bank in Thailand. Maybe if you still have some questions, please feel free to write your questions in the Q&A box so we can use this waiting time to gauge more information from the speakers. Okay, so now we get the good news. So Dr. Wichai Narongwanich is already here, so we can start our session, our fireside session. So first of all, let me introduce Dr. Wichai Narongwanich as FSVP from Kasikorn Bank. Good afternoon and welcome, Dr. Wichai.
Hi, good afternoon. Sorry for joining this session late.
No worries. Thank you so much for making your time to attend to our session today. So maybe I would like to begin my session, our session, by asking you the first question. So what are the key drivers that motivate you to do the sustainability or ESG risk management in your organization?
I think there are two key motivations or key factors. I think the first thing is that since I have been with this organization for nearly 20 years. I think green DNA is part of our culture. It's coming from tone from the top, from Kun Bantun Lamsam. And during the past 20 years, I have seen that we do business by not focusing on trying to exploit short-term benefit for longer-term benefit for every stakeholders. That is one thing. And the second thing is that in these recent years, we got higher and higher expectation from our investor in terms of ESG effort. That's why we need to speed up in terms of sustainability. Because when we talk about sustainability, it's basically we try to build and enhance our trust by aiming to satisfy current needs and requirements or expectation from our stakeholders without compromising the ability of future generation to do the same thing.
Thank you. Thank you, Dr. Vichai.
And based on this, K-Bank embrace sustainable development in the environment, society, and governance as the foundation of our operations. This guiding principle enhances our business innovation and ensures maximum benefit to our stakeholders. Thus, it paves the way toward being a bank of sustainability for our society and nation. In terms of the environment, we aim to be an environmental stewardship towards a zero carbon society. For society, we are committed to be a responsible corporate citizen to create a sustainable society, such as financial inclusion, financial literacy, and diversity and human rights promotion. And for the governance, we aim to be an accountable bank by good corporate governance practices, customer centricity, fair dealing, financial crime, and customer data security and privacy management, for example.
Okay, thank you, Dr. Vichai. Maybe I would like to ask you the second question. So based on those topics or key focus areas that you have identified, are there any risks that you have also identified?
Certainly. Actually, our bank, we try to leverage risk to earn our income. So basically, we try to understand the risk coming from our business. So in terms of let's start from social part then. When we talk about financial inclusion, maybe for quick initiative that we have done is that we lend to SME, to self-employed or small pocket customers. We doing that in a digital way, and also in terms of through the digital lending initiatives, we have gained a lot of customer in that space, and we are number one in terms of SME lending in Thailand. But before doing that, we need to be able to quantify risk of those customers. And this is one of the key things that we need to understand in terms of the credit risk of this group of customers. And in terms of the governance, apart from credit risk, market risk, and operational risk that our bank need to understand, we need to manage the cybersecurity and data privacy of our customer so that we can gain trust from our stakeholder and they're willing to continue to do business with us. Now come to the key and new thing is in terms of the environmental part. When we talk the environmental part, let me focus on the climate risk. When we talk about the climate risk, maybe we separate it into three parts. The first part is to be able to quantify the carbon emission from based on our own operation and also based on the finance emission, which is the emission from the lending to our customer and is the emission from our customer. Okay, in that part, we need to understand that so that we will be able to estimate risk and manage risk, and we try to shift away from the sectors that generate a lot of high carbon intensity. For example, in the coal-fired power generations, that is the one of the subsector that we are trying to shift away from. And we are setting our goal to not lending to this sector anymore. And we try to reduce our exposure of the coal-fired power generation within 2030. That is the first part. The second part comes to that if the world continue to enforce in terms of the carbon emission reduction, we tried the world try to move toward net zero carbon emission. There would be a couple of things that arise in terms of the risk. It's going to be something called transition risk. So basically, the transition risks are related to the transition to a low carbon economy. For example, it's the risk from changing policy and regulations that will have some financial impact to our portfolio, our lending portfolio. And another part is the physical risk, which pretty much the impact from the higher temperature in the world. And as we can see that there are more frequent fire, more frequent flood, and more frequent tornado or hurricanes, those kind of things.
Okay, thank you,
and
Dr.
And the final thing is that once we understand these two kind of risks, we can incorporate that into estimate the probability of default or loss given default in our credit portfolio.
Thank you, Dr. Vichai. So maybe I have two last questions. So the first last question is there any framework that you use in quantifying this risk? And then the second question is maybe you could give us a few tips of how to start doing our risk analysis. Please, Dr. Vichai.
I have to say that in terms of quantifying climate risk, I think based on a recent paper by BCBS, which basically the central bank of the central bank, they do some survey, and they said climate risk is pretty much a new thing for financial institutions. So I think most of the bank try to, like I mentioned, try to quantify the carbon emission, try to quantify the transition and physical risk impact, and then move toward the incorporate those things into the PD, probability of default or loss given default in credit risk. We are new, so we rely on some tools. For example, in our case, we rely on tools from UNEP FI. It's called portfolio impact analysis. Based on that tools, we be able to quantify E, S, and G risk impact to our organization. And by doing so, even though it not exactly give the amount of carbon emission, it provide us the risk ranking of which industry provide higher impact in terms of E, S, and G separately. This is the way that we use at the moment. And apart from that, once we understand the carbon emission impact, we also adopt the framework from TCFD to be able to quantify the impact of transition and physical risk into our portfolio. But I have to say that in terms of converting these two things into the better understand our credit portfolio in terms of the probability of default and loss given default, we are still far from there.
Okay, thank you, Dr. Vichai. Maybe just one tip for companies who want to start ESG risk analysis.
I think the first thing is that at least for us, because we are a financial intermediary, and like I mentioned, finance emission is a key part of our activity. We need to understand the impact of each sector that we lending to. So based on that, we at the moment, we cannot say that we understand it all. So the best point to start is to try to use some framework, like I mentioned, the UNEP FI is a good framework to start, or something like GRI or CDP, just to understand what are the impacts of the environmental, social, and governance. That would be a good start. We still try to rely on those things, those frameworks, to understand our current gaps. And like I mentioned, this kind is not a one-time exercise. This kind of a journey for us, we start this kind of journey maybe nearly a decade ago. That might be a good starting point. And I have to say that for us, in terms of the technical model, I think we can understand. But the key part that make this journey quite difficult is that we are still lacking in terms of the data to be able to quantify those risks. It's a challenge. Then you need to understand more, learning more, and maybe somehow you need help from external parties like consultants and vendors.
Okay, thank you, Dr. Vichai, for your sharing. And of course, we are here as ET, CDP, and GRI. We are here to provide you with some assistance and capacity building to enable all of these organizations to do their own risk analysis and also report it in their sustainability report. So thank you so much, Dr. Vichai, for your sharing this afternoon. And again, so we have arrived at the end of our session for today. So please do not forget to fill in our post-event evaluation survey by scanning the barcode here or type the link that is appearing on this slide. And also please remember that tomorrow we still have another session about greenhouse gas accounting from CDP. So now I would like to officially close this event. Thank you so much for your participation, and we hope that the training materials that we have shared today will be inspiring. And also supportive to your journey to make your organization more sustainable. I'm Henry Julius Wijaya from the Global Reporting Initiative. Would like to say thank you for your attention and see you tomorrow.